A trade deficit occurs when a country imports more goods and services than it exports. This means that the country spends more money on foreign products than it earns from selling its own. A trade deficit can have both positive and negative effects on a country's economy, depending on various factors. For India, a trade deficit can indicate a strong domestic demand for goods and services, which can stimulate economic growth and create jobs. However, it can also imply a lack of competitiveness in the global market, which can hurt the country's export sector and reduce its foreign exchange reserves. A trade deficit can also affect the value of the rupee, which can influence inflation and interest rates. Therefore, it is important for India to balance its trade deficit with other sources of income, such as foreign direct investment, remittances, tourism, and aid. It is also important for India to diversify its export basket and reduce its dependence on oil imports, which account for a large share of its trade deficit. By doing so, India can improve its trade balance and enhance its economic stability and growth. One of the main reasons behind India's trade deficit dropping to a 21-month low in April was the record growth in its exports, especially in gems and jewelry, engineering goods, and petroleum products. According to the preliminary estimates released by the Commerce and Industry Ministry, India's outbound goods shipments in April rose a staggering 197.03% to $30.21 billion compared to the same month last year, when the country was under a strict national lockdown due to the COVID-19 pandemic. Among the major export commodities that recorded positive growth in April, gems and jewelry topped the list with a 927.4% increase, followed by engineering goods with a 234.63% rise, and petroleum products with a 191.53% jump. These three sectors accounted for more than half of India's total exports in April. The sharp growth in these sectors reflects the strong global demand as well as the resilience of Indian exporters amid the challenging situation. Gems and jewelry exports benefited from the revival of consumer sentiment in key markets like the US and Europe, as well as the competitive pricing of Indian products. The sector also witnessed a surge in exports of cut and polished diamonds, gold jewelry, and silver jewelry. Engineering goods exports were driven by robust demand for industrial machinery, iron and steel, electrical machinery and equipment, and motor vehicles and parts. Petroleum products exports increased due to higher international crude oil prices and improved refining margins. The record growth in these sectors has boosted India's export performance and helped narrow down its trade deficit with other countries. However, there are also some challenges ahead, such as the rising COVID-19 cases in India, the supply chain disruptions, the container shortages, and the volatility in commodity prices. Therefore, it is important for India to continue its efforts to diversify its export markets and products, enhance its competitiveness, and support its exporters with adequate policy measures. India's trade deficit in goods widened to $15.10 billion in April 2021, as imports surged more than exports compared to the same month last year. In this section, we will analyze the factors behind the surge in exports and imports, such as low base effect, global demand recovery, discounted crude oil from Russia, and gold imports. One of the main reasons for the sharp rise in exports and imports in April was the low base effect, as India was under a strict national lockdown to curb the spread of coronavirus in April 2020, leading to a significant reduction in international trade volumes. Therefore, the growth rates in April 2021 are not comparable with the same month last year. Another factor that boosted India's exports was the recovery in global demand, especially from key markets like the US and Europe. India's exports of gems and jewelry, engineering goods, and petroleum products recorded high growth rates in April, reflecting the increased demand for these products in the international markets. India also benefited from its diversified export basket, which helped it tap into new opportunities and markets. On the other hand, one of the major factors that drove up India's imports was the discounted crude oil from Russia. India has been trying to reduce its trade deficit with Russia, which has been increasing due to its heavy dependence on Russian oil. India has been importing discounted crude oil from Russia since last year, after Moscow invaded Ukraine and faced sanctions from the West. This has helped India save on its oil import bill and diversify its energy sources. Another factor that contributed to the rise in imports was the surge in gold imports, which increased by more than 2,000 times in April 2021 compared to April 2020. This was mainly due to the low base effect, as gold imports were almost negligible in April last year due to the lockdown and restrictions on international flights. Moreover, gold imports also increased due to the festive and wedding season demand, as well as the lower prices of gold in the international market. These are some of the factors that explain the surge in exports and imports in April 2021, which resulted in a higher trade deficit for India. However, it is important to note that these factors are not permanent and may change over time depending on the evolving situation of the pandemic, geopolitics, and global economy.